Today's Thursday, July 18th. We are now live with the latest in the crypto world. It's 9:30 a.m. in New York City, 2:30 p.m. in London, 10:30 p.m. in Tokyo, and 3:30 p.m. here in Malta. We will be joined with our crypto experts, Jason Fernandez and Kevin Mirko, after we take a quick look at some of the market indicators. The cryptocurrency index, CCI 30, has rebounded from yesterday's low to stand near the 3,700 point level. The index is down by 20% month to date, but it is up by 70% year to date. The recent market turbulence reflects on the 30-day Bitcoin volatility index. It is now approaching the 7% zone after rising for 7 days in a row now. Trading activity has slowed down slightly, and the coin market cap website's 24-hour traded volume indicator has slipped towards the $80 billion mark. The Missouri website's real-time volume measures at just slightly more than $4 billion. The Bitcoin dominance indicator has eased back slightly over the past 24 hours towards the 65% level. However, it is up by approximately 100% from where it stood in January of last year. The top 5 digital assets are all trading in the green after yesterday's sell-off. The $10,000 psychological level is now acting as resistance for Bitcoin. Ether once again trades at more than $200. XRP has broken through the key 30-cent resistance. Litecoin has flipped Bitcoin Cash to reclaim the 4th spot by market capitalization. This comes on a double-digit increase as the assets heads back towards the $100 mark. And lastly, Bitcoin Cash has been facing resistance around the $300 level. The Coin 360 heat map shows a lot of green today. This comes after the assets dropped sharply yesterday. According to the token spread website, the Bitfinex and XMO exchanges have the biggest price difference for the Bitcoin dollar pair, and it is 1.3%. The CEX exchange has the biggest spread, and it is 0.35%. Let's now take a quick look at some of the characteristics of the Rough Chain project. It is a platform that looks to improve commerce by combining the Internet of Things and the blockchain technology. Rough Chain contains a distributed operating system and an open main chain. This helps to connect peer-to-peer network and consensus mechanisms from the virtual world with reality. The public chain's virtual currency of contracts is the Rough token. This virtual coin will be the benchmark for incentives, spending, and trading within the public chain ecosystem. Its price hit its all-time high of 22 cents in January of last year. Currently, it trades just slightly less than 2 cents. We will now review the performance of various cryptocurrency asset classes as grouped by the Missouri website. The infrastructure group is up by 5% as the top assets are trading in the green. The media and entertainment category has gained just over 3%. There is mostly green in this section as well. The financial sector is the top performer today with a gain of 6.5%. Binance Coin and Chainlink both have surged by double digits. The currency category posts an increase of 5%, and lastly, the services section stands 4.5% in the green. This is despite the Huobi token and the MaidSafe coin both trading lower. This is where the 5 major cryptocurrency categories stand so far this Thursday. We will now focus on the most significant moves among the top 100 cryptocurrencies to identify the top gainers and the decliners. We will then return with our crypto experts after this short break, so do not go anywhere.
80 different countries all around the world, which makes us grow in like a sphere.
We are stronger than ever.
Have these questions answered without disclosing anything.
AI field is mostly controlled by a few large corporations.
Much busier, bigger than ever.
In the mid-2020s. I do think that will come.
We should kind of keep in mind that we want the world to be a better place.
$15 billion a day. This is incredible.
People find a way to create infrastructure.
I think knowledge is one of the most important things in the world.
We laid the foundation for the distributed trust model that Satoshi builds on.
It does come with some risks, but at the same time, I think it's an opportunity for countries.
Individuals miss the boat on a market, they miss the boat. When the institutions miss the boat, they bring the boat back.
This is Blocks Live TV.
We are back with our crypto experts, Jason Fernandez, COO and co-founder of AE Token, and Kevin Mirko, CEO of the Coin Metro Exchange. Guys, great to have both of you. How are you doing today?
Good. How are you?
I'm good, thank you. So, Kevin, we can see that you are somewhere extremely interesting, and we'll let our audiences know, because it's not your usual background. You are at a Metallica concert. So I have to thank you so much for tuning in, despite being in the middle of a field with very difficult 4G.
Yeah, in a field that's windy, as you can see, because of the umbrella. If I had hair, you'd probably see it more.
Exactly.
But yeah, in a windy field in the middle of the summer.
Exactly. So we have to thank you very much for staying with us. So, Jason, we will come to you first. The total cryptocurrency market capitalization dropped by more than $100 billion over a period of 7 days to slip below the $250 billion mark. This represented a decline of roughly 30%. So, Jason, is this the retracement that actually many were expecting?
I don't think so, because mainly this didn't really have any general, it wasn't really probably going to happen anyways. It happened most likely because of the action with Libra and essentially all this this talk about Bitcoin and Libra essentially being national, well, at least Bitcoin being some sort of national security threat. So I think a lot of it had to do with that. Like I said yesterday, on June 18th, Bitcoin was hovering around 92, 9,300, and there was a pop in the interest, you know, when Libra came out, but that evaporated due to regulatory concerns, and that had us go back to about 92, 9,300 yesterday. But that actually set the stage for another rise upward, because especially with the Federal Reserve Chairman referring to Bitcoin as comparable to gold. So that I think made a difference. And it's trading at 9,500 right now, but it has reached as high as 9,900. So it certainly seems like it's on its way up again.
Okay, so still quite positive. And we did speak about this the other day. You were saying, you know, there is that correlation between Libra and the price of Bitcoin there. So that's quite interesting. We'll have to follow that and see how it plays out. Kevin, back to you in the field. Tell us, what are your thoughts? Is this the retracement that many were expecting?
It may not be the retracement they were expecting, but it's the retracement they got, right? So I think Jason's right that if the fundamentals played a role here, which would tell me that, again, and I've said this past on the show, that the market is actually maturing, right? Fundamentals drive mature markets. But what I would add into what Jason said is that remember that we have a futures market that does, in general, more volume than the underlying actually deliverable market. And institutions will generally use a futures market to short more than they will use it to buy, especially based on fundamentals. So we probably were seeing some sell pressure on the future side, which then basically affected the deliverable side. As people saw the futures market going lower, they were selling on the deliverable side. So I would take a look at futures volume. It's always good to take a look at futures volume when you're a day trader, because it can generally dictate where price will head. Because a lot of times there's a gap in time from when the futures market starts to move in one direction before the actual underlying deliverable market starts to move. So I agree 100%. Probably 90% fundamentals here. Fundamentals then triggering stops, which then pushed us below the 10,000 mark. And right now you're just seeing that the retail crowd is kind of waiting for the right time to buy back in. But at the same time, we probably have a lot of guys on the institutional side waiting for the right time to sell again. So I think we're going to see a bit of ebb and flow around this 10K level as resistance and then support. And then I still think 14,000 is in the cards. And once we see 14, maybe even 15, but I think we're going to play around with this general generally 13 to 15,000 and onwards down below 10,000 range for a bit of time before we actually see any real movement in one direction or another.
Okay, but you don't necessarily think that this retracement is what they were expecting, and I guess, like you said, the fundamentals here are very much key. Interesting though, 14K in the cards. That will be very exciting. We'll have to just, of course, keep our eyes on that. Now, Jason, we have seen Twitter users reporting that the market decline was triggered by a large sell order of 15,000 Ether on the Bitstamp exchange. Jason, do you see this move as something that might have had enough force to actually send ripples through the markets?
Yeah, and also just to add to the previous discussion, the retracement that people like Tony Vays was predicting was something like 40 to 50%. So we didn't see anything near that, and we did see a lot of support around 9,000, 10,000, which is what we saw before anyways, and we were there a month ago anyways. So this was definitely not the retracement that a lot of people were predicting. But going back to this specific situation about the 15,000 Ether that was sold on Bitstamp, had it been broken down into smaller sums and sold across multiple cryptocurrency exchanges over the course of a day, you would have had much less slippage. The price would have slipped much less. So I think the fact that they sold it the way they did, so that's probably the most interesting, right? The fact that they sold it the way they did on Bitstamp, it could have meant two things. One is that they were just sort of just trying to get rid of it and just interested in the ease of sort of selling it in one go. But it's probably more likely that price slippage was actually the point. So it was sort of some sort of coordinated market manipulation in order to sort of trigger the shorts on some, let's say, cryptocurrency derivatives platform like BitMEX. And I think a lot of people felt that like a relatively illiquid trade, like on Bitstamp, would essentially cause something like that. A sell-off would actually be more exaggerated, have a more exaggerated effect on BitMEX's derivative indexes. So in other words, like it sort of seems almost like this was market manipulation in order to, sort of trigger some shorts.
Okay, so market manipulation there. You're quite cynical about that. So we'll come back to you, Kevin. What are your thoughts? Do you think this, sent ripples through the markets here?
So I'm usually quite a cynic, but I'll have to step back from that role just now and just say that, we're talking roughly $4 million US, right, in terms of a single trade. If you compare that to the amount of liquidity that was lost on the market, I don't think it really had anything to do with it. I think that what we have here is that in the mature markets, banks and large players have access to information on what other players are doing. For instance, there's things that you can look at on an institutional market. Let's say if you have access to Bloomberg Terminal and things like this, like cash flow indexes and things like that, that show you basically where cash is flowing in and out of the market. Big orders, big stops, big puts, et cetera, that sit within the market. And it gives you a bit of information on where the market may head. Here in crypto, people generally can get that information from the blockchain, but they also can speculate on what that information means. And so most of the time when you see a whale or some type of large move, people immediately speculate, and they speculate on the manipulation side. I don't think it could be manipulation, but I think that's pretty much lazy manipulation. There's many other ways to manipulate this market, I think, much more effectively than getting caught in slippage that may actually end up costing you money at the end of the day. So Jason could be right, but I think here we're simply talking about fundamentals over technicals, meaning that people got scared when they heard someone in the U.S. government. He actually didn't say it was a national security threat. What he said was that basically, terrorist funding is a national security threat, and thus, if Bitcoin is somehow being tied to terrorism, they want to know who's doing it, KYC, AML, etc. But people obviously take that one way, put it on Facebook, put it on Twitter, and then all of a sudden people start selling because it's fear-based selling. So I think it's still 90% fundamentals. I don't think this played much of a role, but definitely every time we see something like this, you're going to have somebody speculating that it had something to do with a move, because when you look for a reason, guys, you will find one.
Okay, so 90% fundamentals, and very much, you say, tied into that hysteria that kind of just naturally washes and waves across social media there after somebody makes a statement like that. So very, very interesting. I guess not overly convinced about that manipulation as much as Jason is. Now we'll just move on to Jason again. The chairman of the Federal Reserve, Jerome Powell, recently spoke on Bitcoin. According to the chair, no one uses it for payments, and it is a speculative store of value like gold. Many argue that the user user experience is one of the main reasons for slow adoption. So Jason, do you agree here?
So first, I just wanted to take a minute and reflect on the fact that no less than the chairman of the Federal Reserve has now referred to Bitcoin as an alternative to gold. Now, he did call it a speculative store of value, but Bitcoin is just 10 years old. So I think that's a huge accomplishment for Bitcoin, and I mean, I think it really means something in terms of that this idea has legs. To answer the second part of your question, yes, I do think user experience is one of the main reasons for slow adoption, but it's also amazing to see Bitcoin's growth in light of how technical it is to use it. So there's cold storage, there's public-private keys, you have two-factor authentication, you have multiple QR codes to deal with, one for each cryptocurrency, and then they have to worry about hacks. So ultimately, it's a UI problem that, you know, more and more companies are going to be sort of focused on making things easier. There's a company out of London called Pace that they're trying to allow you to manage all cryptocurrencies with one QR code. But there's going to be different solutions that sort of going to make it easier and easier to use. And as that happens, you're going to see more and more adoption.
Okay, and like you said, I find that absolutely fascinating as well, isn't it? That, you know, the chairman of the Federal Reserve is now potentially sort of referring to Bitcoin as gold. And, you know, despite that user experience, the progress is still moving forward, as you mentioned there. So, Kevin, we'll come back to you. Your thoughts for us.
Kevin, sorry, did you direct that to me, Leah? I missed
yes,
it.
Just throwing it back to you. What are your thoughts on this?
Okay, so I agree with Jason. I think that he may come back and retract that statement, or not retract it, but probably amend it the next time we hear him speak, because that's kind of what I would do if I was in a situation, regardless of what I actually thought. But from a political standpoint, but when it comes to what he said, I agree. I think it's amazing that was said in public, in a public hearing. I would say, look, gold is a speculative store of asset as well. My grandfather bought it in the 80s at over $800, almost $900. I bought it in 2005 at $256 an ounce. So anybody that tells you that gold is a great store of value and has never fluctuated over time, they haven't lived that long. So gold is not the best store of value. I would say that you know, him saying that that Bitcoin, he basically just kind of destroyed a lot of economist viewpoints that have come out on crypto Twitter negative towards Bitcoin. So that's great. Having said that, though, I think that his comments, generally speaking, I think it shows that even the guys that tend to have an understanding don't fully understand, and that's still worrying to me, because I think he took the easy road, and that's why I think he'll probably retract this or amend it at some point in the future. Meaning he could either say it was for payments, or he could say it was a store of value, and he chose the latter. But I think, to be honest, for me, it doesn't sit in either of those. It hasn't proven to be either of those. But really, what the big deal here is decentralization, because had Bitcoin been a centralized crypto asset, it would already have been shut down. And the only reason that we're having hearings about it is because they can't easily shut it down. They can only control the entries and exits. So I think that's a major point. And I didn't really hear that echo in his statement, which tells me that he may still not fully understand really what Bitcoin is, and not just Bitcoin, but what this whole kind of movement is all about creating decentralized deflationary currency that isn't tied to a single country's monetary policy, and that's much bigger than his statement. So I still think they have things to learn. But I was happy to hear it, and I was surprised to hear it, to be quite honest.
But I think, that is very much the case with many of the people in traditional financial business positions. They don't really know what this space is about just yet, and we saw that with the hearings in the Senate. So it's very much a new space for everybody. And I think, it's very interesting how what you say with gold, in your experience, you bought it for less than your grandfather did. And I think that's a very interesting point to make, because people talk about Bitcoin crashing. But I guess, all assets move up and down, they fluctuate. Now, just continuing with this, Kevin, we will stick with you for the minute. Jack Dorsey's Square Crypto has actually posted an article on the Medium that they are looking to hire someone who could improve the user experience for Bitcoin. This person will work within the Square Crypto team and actually engage with the open source community. So, Kevin, is this likely to succeed, or is this a one man's ambition to actually change Bitcoin according to his vision?
Whether Square succeeds, I have no idea. So my hat's off to Jack Dorsey. Obviously, he's created one of the biggest platforms on the internet, which is Twitter, and Square is a great payments platform. Will he succeed to actually get the UI to the point where people can use crypto without knowing they're using it? I have no idea. But will we collectively do it? Of course we will, because we have no choice. You know, I say this a lot when I compare. Let's say, you know, it's hard to compare cryptocurrency to anything else unless and really make people understand what we're trying to do here in terms of changing the way the world works in our own little community right now. But if you compare it to the internet, right? So in 1994-95, I was on the internet. I had a baud modem, 14.4 kbs baud modem. It took about 25 minutes to sign into the internet. I had to dial like 40 different numbers. You'd finally get on, and you'd probably get knocked off in 5 minutes. If somebody went to use a phone, make a phone call, you get knocked off. The user experience sucked 100%. It was horrible. And when you ask people about the internet then, and they actually held, Congress actually held panel discussions about this back in the early 90s. And what they said is that it was unsafe, that you shouldn't use your credit card information, that you shouldn't speak to people over the internet because it was anonymous. It's a lot of the same things that they say about cryptocurrency. But guess what? The UI was improved. AOL came out, started mailing, you know, discs all around the world, so people CDs, so people could log into the internet easier. And guess what happened? Well, now the internet's on every device. We have the Internet of Things, and even grandma uses the internet. So the same thing needs to happen and will happen with crypto. Whether it happens with Bitcoin, whether it happens with some other asset, whether it happens under a completely subset of assets that haven't even been created yet, it will happen. And whether, I don't know if Jack Dorsey's the guys that's going to make it happen, but everybody needs to push towards that level. The guys who are trying to make things that are, you know, double dual crypto cold wallet that sits on your, you know, Mars and only accessible via, you know, a Mars rover, you know, those things are great for geeks, but they're not going to progress the market forward. So the guys that are working on UI that's easy, that allows one button push access to things, are the guys that will succeed, and that's really what will push us into massive adoption.
And I think, you know, it's absolutely fantastic and quite extraordinary, really, to think about actually what's happening now is mirroring what we saw in the 90s with the development of the internet. So absolutely fantastic and fascinating to see how this will move forward. Like you say, whether it is with Bitcoin or something else that we haven't even heard of just yet. Just exciting times ahead. We'll have to wait and see. So Jason, back to you. Your thoughts for us, please.
So I think I don't think it's a problem if it's sort of if Jack Dorsey seeks to change Bitcoin according to his vision. I think that it will get better. The UI will get better. Whether Square is the one to actually sort of do it, who knows? Jack Dorsey he does have the sort of clout and ability to make Bitcoin easier to use, but he's not some master of puppets, right? There's several other people that will probably come in and take a crack at improving Bitcoin's design and things like that. So apparently with his solution, he's hiring somebody that will sort of work with the Square crypto team and engage with sort of the broader open source developer community to progress towards a new vision of Bitcoin, which would probably be easier to use. But I think the biggest effect that this will have is sort of an ancillary effect, right? Because if Facebook has been slowly hiring as many people as possible, as many competent people as possible from the crypto world, and then Square jumps in where they're rushing into crypto and they're hiring a whole bunch of blockchain talent, you're going to start having obviously a dearth of new talent, but that's quickly going to be filled with a whole bunch of new programmers that are coming into the space that are ready to sort of take this to the next level, because you're going to have that demand that's created, and that demand is going to be filled. So I think sort of the ancillary effect of this is you have Square, which is obviously, has that sort of relationship with Twitter via Jack Dorsey, and then you have Facebook and Libra and the Calibra wallet, and once they start hiring, it's going to become a situation where it's going to do a lot for, I think, the whole ecosystem in general, and just getting us more qualified programmers.
Absolutely, actually undeniable when you have, these major names like we've spoken about, Facebook, Twitter, working to essentially improve crypto and improve the space. So really exciting times ahead. Now, Kevin, we will come back to you. The Coinbase exchange has released new tools for traders today. These indicators show top crypto holder activity, typical hold times, and price correlation. Are these tools proving useful data for crypto traders?
So the first question would be, is the data useful? And I would say yes. And again, I'd go back to say that, traditionally banks and larger financial institutions have had access to similar data in traditional markets, and it definitely helps them make a market, which helps them make money at the end of the day, and and forces everybody to lose money, unfortunately. So the data itself is definitely useful, and the more data we have like this that can be compiled easily for traders, the better. The question is, will it actually help traders? So if you're talking about retail traders, to be honest, the more information a retail trader has, usually the worse they do. They tend to overcomplicate trading. Trading is not difficult, guys. I've been on both sides of a trading desk. I'm telling you, trading is not, anybody can learn how to trade. What they can't learn is psychology. So if you can't learn to sit on your hands and follow a strategy and get out of a trade when it's bad and get more into a trade when it's good, you will lose. So if you're the type of person that doesn't just have like mind over matter type of control and just gets anxious and will pull out of the market or go into the market without a plan, then you're never going to be a good trader, regardless of how much information you have in front of you, how many lines are on your chart, and how well you can spot support and resistance. So I think the data is good. That doesn't mean, though, that it's good for traders, to be quite honest. It'll be good for some traders, but many traders really shouldn't even look at more data, right? They should find an easy plan and stick to it, and that's really the only way that they can actually probably become profitable in the end.
Okay, so some very, very key advice there. And Jason, do you tend to take a similar opinion? Do you think, well, actually, traders this isn't good for all traders? They should be looking elsewhere?
Yeah, I mean, supposedly this is marketed to new traders, but like Kevin was saying, it might be interesting to, there might be a situation of too much data. But essentially the way this is sort of put together is that they're providing this data, which is sort of anonymized, taken from like the top 10% of holders from each asset, whether it's Bitcoin or Ethereum. And then sort of the users would get regular updates on what's being bought and sold, again, by this top 10%. And the signals would then show the median number of days a coin stays in a customer's account, the relative popularity of different assets, and also measure how cryptocurrency prices move in relation to another. So that's obviously like really useful data. But the question is, it's not just what data you get; it's how you interpret it, and how you and also your risk profile. So those are the things that obviously affect whether you're a trader or not. I mean, whether you're a good trader, anyhow. The interesting thing is it's sort of sad but true, but Coinbase traders are not able to refuse to have that data be used as part of this tool. Supposedly, Coinbase says that the data is completely decoupled from the user and it's aggregated, it's anonymized. So all you see is just a couple of high-level metrics, but it's not possible if somebody did not want their data shared. I mean, I think if you're spending money for somebody to also mine your data, it's sort of paying double or paying twice anyway. There's no way to opt out.
Okay, now just finally and briefly, because we are slightly pushed for time, the Japanese cryptocurrency exchange Bitpoint has announced that users affected by the recent hack will be reimbursed in cryptocurrency instead of cash. So the timing is not good for users, as this comes after markets dropped by 30% over a week. Obviously, this is good news that people are getting their assets back, but Kevin, we'll come back to you. What is your opinion on the reimbursement crypto versus cash situation here?
Well, I think we found out who is the one that did the 15,000 Ether to manipulate the market that Jason was talking about, right? It was these guys, right? So you say you got hacked, you manipulate the market, it falls, you short the futures, and then you give them back some money that's now 30% worth 30%.
Always cynical, always cynical.
No, but I would say that, look, the fact that they're reimbursing anything should be a good sign, right? Because they're not forced to. There is no compensation fund. I don't think there's any forced compensation fund under the JFSA in Japan. So the fact that they're doing this, one, shows they want to keep their license. Two, shows that they're actually trying to do the right thing. It's not necessarily their fault that assets fell by X% over the last few days or weeks. That's just the market. Obviously, you would hope that those assets would come back up in price anyway. It remains to be seen how they reimburse. Hopefully, they don't create their own crypto to do the reimbursement, a la Bitfinex. That would be a mess and probably lead to some regulatory scrutiny that would definitely be warranted. But look, the fact that they probably lost cryptocurrency, their clients probably lost mostly in cryptocurrency. They probably hold most of the reserves in crypto. So the fact they're repaying in crypto kind of makes sense. So yeah, I think it's just good to see that there are businesses out there that take full responsibility when their systems are at fault. So then they should. So hats off to them. I remember a case with margin trading, right, where we had a bunch of margin calls. I think it was on Polonex, if I'm not mistaken, and they decided to say that they weren't going to actually reinstate those trades. That was horrible. This is at least a step in the right direction, and they're doing what they should do.
Okay, Kevin, thank you for your thoughts. I'm pleased that it wasn't too cynical in the end. It did have a bit of a light at the end of the tunnel there. And Jason, just finally, your thoughts on this for us, please.
So whether it's reinvesting crypto or cash, it really doesn't matter as long as there's liquidity. And again, it's not some coin that they created. It's not, Tether or some internal coin that they've created. I mean, again, as Kevin mentioned, most of these people were holding these funds in crypto anyways. So reimbursing them in crypto sort of just makes sense. But what they ought to do is sort of reimburse them in a sort of standard coin like Bitcoin, or at least some sort of at least top 10 coins. So it's not worthless, and that there's enough liquidity in case those individuals want to cash it out. And that would be better for the market overall, because then you don't have a steep dip when those tokens are all sold at the same time.
Kevin, Jason, as always, absolute pleasure having you both on the program. Thank you so much. And Kevin, enjoy your Metallica concert.
Thank you, Leah.
All right, take care. Thank you very much. Now, before we sign off, I do have a last-minute update from our editorial staff regarding the crypto market. The total market capitalization has given up some of the gains accumulated over the past 24 hours to slip south of the $260 billion mark. Trading activity has slowed down further. The coin market cap website's daily traded volume indicator measures at less than $80 billion. Bitcoin has given up most of the gains after facing resistance at the $10,000 price level. Well, that is all for this Thursday's Crypto Now live show. We thank Kevin and Jason for their expert analysis. We thank the audience for joining us and invite you all to accompany us every weekday at the same time.